Let's just address the elephant in the room. If you only have one bank account as an adult living in the UK, I think that you're setting yourself up for problems. And that's why in this video, I'm going to be sharing the elephant in the room, which bank accounts that everybody living in the UK must have. Now, if that sounds like something that you want to watch, then you should definitely keep on watching. Hi guys, welcome back again to the channel. If it's your first time seeing my face, my name is Oyinkan and you, my darling, are most definitely welcome. I'd like to ask you to please like, share, subscribe and all that good stuff if you end up enjoying this video. And without further ado, let's jump right into the video. First account that you should have is the regular one that everybody has, which is the current account. This account is where you get your salary. This account is where you pay your bills. This account is literally where everything gets done. Now, because this is your income account, it's really important for you to choose any bank that you like, open an account, get it done and over with. But one thing I would say is avoid by all means any bank account that says that you need to pay for it, because honestly, there is no benefit that is worth any fee that the bank account wants to charge you. Don't pay for any bank account. Find a free current account and open that for yourself, and then from there we can get cracking. So the second bank account that you need to have is an emergency fund account. Now, I've spoken about emergency funds before, and most financial advisors will actually tell you to have 3 to 6 months worth of your life daily spendings and put that together, save up for it and put it in an emergency fund. This is because obviously no one knows what's going to happen tomorrow. People get laid off their jobs, COVID happens, this, that, and the third, and you want some form of safety net so that no matter the situation, you're not under any form of pressure and you can at least allow your brain to breathe while you're trying to figure out what your next steps should be. So how do you calculate your emergency fund? First of all, know exactly how much you need to survive at the basics. We're talking rent, council tax, car bill or transportation, mortgage, things that are actually essential, not things like eating out, not things like holidays, the things that if you don't do, you're going to run into trouble. Calculate that amount. Let's say it's £3,000. Multiply that by 3. You get £9,000. So you should be aiming to have an account that you've got £9,000 to £18,000 in, and that will typically be your emergency fund, so that if there's an emergency, you can pull out of there. So that is what that second account is. The third account that you need is a short-term savings account. Now, when I say this, most banks have an opportunity for you to save within your account. So let's say, for example, you've got an account with Revolut. I know for sure that Revolut has something that they call a vault, and you can also earn interest on that vault, on the money that you've put in that vault. So for short-term expenditure, so things like if you're going on a holiday, this holiday is going to cost you £1,200. You want to put aside maybe £100 every month towards your holiday, so that at the end of the period, you have your money that you can now take for your holiday instead of pulling out all that money all at once from your bank account, because that way you're going to feel it more than taking the money in bits and bobs, gently saving and putting it in a separate dedicated account that you know that this is exactly what this money is for. So for your emergency fund, I would recommend a high yield savings account. There are many banks out there, many financial institutions out there that offer high yield savings accounts. The onus is on you to do your research and find whatever works for you. But I can recommend Plum because that's the one I use, and I'll leave the links to Plum down in the description box just in case you guys want to check it out. For your short-term savings account, again, any bank that you use, I personally use Revolut. I will leave the links to Revolut down in the description box just in case you guys want to check it out. But those are the first 3 accounts that you should have. Your regular checking or current account where you get your salary or you get your money. So the second account would be your emergency fund, and the third account would be your short-term savings account. Moving on, we're talking long-term now, so we're talking into the future. The fourth account that you should have is a pension account. I know that everyone thinks they're young right now and nobody ever really looks into the future to the point where they're old and gray, but that's why you are different from the average person, and that's why you are setting yourself up for financial freedom. Looking into the future, think about what the life that you envision for your 65-year-old self. Do you see your 65-year-old self sweating, hustling, running up and down everywhere looking for money? If the answer is no, then you need a pension account. Now, most people tend to opt out of their pension because they think, why am I saving for my 65-year-old self? Who even told me that I'm going to be alive by then? True, there are no guarantees, but what if you are alive? What quality of life do you want for your 65-year-old self? Do you understand what I mean? That's why I would recommend strongly that you actually have a pension and you put some portion of your salary into your pension to save for your 65-year-old self and to save for retirement so that you can be sipping mimosas on a beach and enjoying your life. Now, the fifth account that you should have is a lifetime individual savings account. Now, if you're in the UK, you know what an ISA is, which is basically a tax-efficient vehicle to invest and save your money. With a lifetime individual savings account, you can use that money towards purchasing your first property or towards retirement. So if you haven't bought a property yet, if you put £4,000 into that account per tax year, you get an additional £1,000 for free from the government, meaning that if you save £4,000, you get £5,000 as £1,000 being bonus from the government. If you are saving towards your property, this is a great way for you to actually save. Otherwise, you can use that money for retirement. So those are the only two uses of that account. And if you haven't bought a property yet, honestly, a lifetime individual savings account is compulsory. You must have it. It is non-negotiable. And if you want to take things further, after you bought your first property and you feel like you just want to keep saving for retirement, again, do that in a LISA rig. Aside the pension that you've already set aside, a LISA is the next best thing that you can do for yourself to get that free money, because you can also invest the money in your LISA to either a stocks and shares or a cash one, depending on whatever you want and the game that you're trying to play in. Okay? And finally, the last account that you must have is a stocks and shares account. Now, in the UK, you can invest up to £20,000 per annum, and the LISA is also included in that £20,000 per annum that you can invest. But you can invest up to £20,000 per annum, and the returns on that money would be tax-free. You're not going to pay £1 on tax. You're not going to pay nothing. So if you're not using a stocks and shares ISA to invest a portion of your salary monthly, I think that you're doing yourself a huge disservice. I'm not going to lie to you. I think that you need to cultivate the habit of investing. Now, I know that people will say, oh, I don't really have a lot of money to invest. I don't really know anything about investing, but you must not be a genius. I personally would recommend investing in funds over picking individual stocks, because you are not a stockbroker. You don't know what the market is and you're not actively tracking the market. So the safest option for you to do would be to invest in funds, which again, you can choose the level of risk that you want: high risk, low risk, medium risk, whatever risk you want. Choose the level of risk and just invest. The important thing is just to build that investment muscle, because like Warren Buffett said, investment and compound interest is the sixth wonder of the world. Time in the market and money that you've put are the greatest things you can do for yourself. I've spoken about the effects of compound interest so much on this channel, and honestly, if you want to watch the videos where I've talked about like junior ISA for your children and how a little amount of money can potentially make your children millionaires, then you want to watch this video that I'm going to put on the screen, which is, it just breaks everything down. That is the video where I talk about how I plan on making my children millionaires. Thank you so much for watching, and I will catch you guys in my next video. Bye guys.